Easy. Just avoid these dangerous situations. Throw out your bed. Falling out of bed kills 450 people annually. Of course, always watch what you eat. And eat from. Never use a vending machine or even stand close to one. They kill 13 people a year. And ants? They cause 30 deaths per year. So if you see ants, run. But not too fast. 6 runners die per year during races. So stay indoors, but try not to move. 18,000 deaths occur from accidental injuries in the home. Baths alone kill 340 people. Oh, and not to mention heart disease, respiratory illnesses, stroke, cancer, and unintentional injuries. If you're able to avoid all this, you will greatly increase your chances of living a long and happy life. The truth is, the only way to protect yourself is to make sure you can provide for your loved ones no matter what happens, even if you're one of the 130 people killed by deer. Life insurance is the safety net that protects your family financially if you can't be there to support them. A life insurance policy provides a lump sum of money that is paid to your beneficiaries upon your death. The money can be used for lost income, funeral expenses, bills, funding a child's college education, and more. Whatever you need, there's a policy right for you. Term life insurance is coverage intended for a specific period of time, typically from 5 to 30 years. Whole life or permanent life insurance covers you for life and includes a savings component that helps grow tax-deferred income that, after time, can be used as a loan, to pay premiums, or as added death benefits for your beneficiaries. Term and whole life insurance policies require a medical exam, but there are also no medical exam life insurance policies that can be secured in as quickly as 24 hours. Interested in learning more about life insurance and why you should have it? Visit our Learning Center or FAQ page. If you're ready to get started or have questions for our life insurance representatives, fill out the form below for a free life insurance quote today. Then, celebrate your new security by going to the beach. Sharks only kill 5 people a year. Less than all these things.
I'm almost done getting my car dealer license application ready. I went through a criminal background check, paid my licensing fees, and found a place of business. I even got insurance. But does that mean I fulfilled the auto dealer bond requirement? Aren't they one and the same thing?
No, in fact they are quite different. You need to get both of them in order to get your auto dealer license. While liability insurance provides protection for your business and the cars on your lot, an auto dealer bond provides protection for the state and your customers. It's the government's way of making sure you're complying with state regulations. It also takes care of your customers in case you use any fraudulent business methods.
Oh, now it makes sense. So do I apply for the bond at the DMV?
No. Auto dealer bonds, like all surety bonds, are underwritten by surety bond companies and obtained through bond agencies such as Lens Surety Bonds. Bonding companies typically don't work directly with the public, so you need to find a good bonding agency. That means an agency that partners with many different bonding companies, since this will maximize your chances of obtaining a bond. The agency will also be able to find the bonding company that offers you the lowest premium.
I understand. When you say the lowest premium, do you mean that the cost of the bond isn't fixed?
Exactly right. Once you apply with us, you will receive a quote showing the actual premium you have to pay.
So how is my premium calculated?
The single most important factor is the business owner's personal credit score. The higher it is, the better.
I see. But I have bad credit. Does this mean I won't be able to get bonded and open my car dealership?
Having bad credit, as well as other credit issues such as tax liens, civil judgments, or past bankruptcies, puts you in a high-risk category. This may increase your auto dealer bond premiums to a range of 5 to 15%, but if you provide your agent with strong financials or business statements, cash verification, or strong liquid assets, you can lower your premium.
Thank you very much for this detailed information. And once I get the bond, can I open dealerships in other states too?
An auto dealer bond is only valid within the state it was issued. So is your car dealer license. For every new state in which you want to open a dealership, you'll have to apply for a new bond and license.
And once I obtain an auto dealer bond, when and how do I renew it?
How often you renew your auto dealer bond will depend on your state's requirements. Most states want you to renew your license every year, which automatically means you'll need to renew your auto dealer bond every year too. If you work with Lens Surety Bonds, you'll never have to worry about missing your renewal date though. 3 months before your due date, our staff will make sure to notify you and will even send you the invoice with your new premium.
Thanks once again. You've been more than helpful.
Anytime. Should you have any questions about auto dealer bonds, call our agents and they will be happy to assist you.
Millions of us now have health insurance under the Affordable Care Act, or what some people call Obamacare. But like many things in life, your health insurance can often be confusing and complicated. Whether you've been insured for years or you're new to the game, understanding your policy is important to your health and your wallet. First things first, you have to pay your premium every month or your insurance could get canceled, kind of like your cable subscription. You can also think of it like a shared healthcare piggy bank. We all chip in each month, even if we're healthy, so the money is there when we need it. If you get insurance at work, your employer probably pays most of your premium, and the rest comes out of your paycheck automatically. If you have Medicaid, you most likely don't have to pay any premium at all. The federal government and your state take care of that. If you're insured through a new health insurance marketplace, depending on your income, you may be eligible for a tax credit that pays a portion of your premium. Once you have that shiny new insurance card, you'll want to try really hard to keep it in your wallet. To better your odds at staying healthy, be sure to take advantage of the free preventive services that all new insurance plans provide. But of course, stuff happens. And that's when insurance really comes in handy. Now, having insurance helps a lot, but it doesn't mean all your health care is going to be free. There are lots of details about your insurance plan that affect how much you pay when you get sick or injured. If you have Medicaid, a lot of these services could very well be free. Otherwise, you'll likely have to pay something when you go to the doctor or fill a prescription. This is called a copay when it's a specific dollar amount, like $25 per visit, or coinsurance if it's a percentage of the bill. There's also the deductible. That's how much comes out of your own pocket before your insurance starts paying. Depending on your plan, you might have a deductible for all your care, or it might only apply to some types of care, like hospital stays and prescriptions. So read your plan material, because it could add up to thousands of dollars. Another important part of your plan is the out-of-pocket maximum. This is the most you'll ever have to pay in any 1 year, at least for the benefits your plan covers. Your insurer will pay 100% of anything beyond the maximum for the rest of the year. It can be just as confusing dealing with prescriptions. Your plan has a list of drugs it will pay for, called a formulary, but the prices vary. Check with your doctor or pharmacist because a generic drug might fix you up the same as a brand name drug, but the price difference could be huge. So, those are the costs typically involved. But remember that they'll be affected by your insurance plan's provider network. This is a list of doctors and hospitals that are connected to your plan. Insurance companies negotiate discounts with these providers. Stay in network and the discounts get passed to you. Go out of network, and you could end up paying full price. And remember that out-of-pocket limit? It won't work if you go out of network. In some plans, like HMOs or EPOs, your insurance would pay nothing if you go out of network. In other plans, like PPOs, your insurance will cover you no matter where you go, but you'll pay a lot more if you go out of network. Also, if you want to visit a specialist, like an orthopedist, some plans require a referral from your primary care doctor. Sound easy enough? Well, sometimes staying in network can be tricky. In a hospital, it's possible that your surgeon could be in network while your anesthesiologist is not. If this happens to you, don't be afraid to negotiate with your provider or file an appeal with your insurer. So as you can see, there's a lot to think about when you choose an insurance plan each year. Some plans may have low premiums, but fewer doctors or hospitals and high deductibles. There are trade-offs, and understanding and choosing among plans isn't always easy. Remember, if you have questions, call your health plan and ask, or check with your hospital or doctor. If you still have questions, your state insurance department or consumer assistance program can help. With the Affordable Care Act, there's new support for consumers, so take advantage of it. Having health insurance protection is a good thing, especially when you know how it works. We hope you're now better prepared for the next time you have to pull that insurance card out of your wallet. Stay safe, America.
Hi, my name is Derek Howlett. I'm a Senior Solutions Architect here at Red Hat UK. I'm here to tell you about a business rules management platform called BRMS, and today I'm going to show you the insurance demo, which features business rules and business process management. The scenario we feature today is simply a rules repository, a user going in, entering their details and getting a price. The details we enter are pretty simple. We enter the driver's name, address and age, and then we ask for details around the car, make, model and registration. We simply make a decision based upon the age of the driver and the type of car he's driving, and these are the two factors that control the price. Now, using a web browser, we navigate to BRMS's web console and log in as admin. So navigating to the knowledge base on the left-hand side using the Explorer, we drill down through the package to reveal a list of assets. In particular, we're going to open up the process and take a look at the quote process. Now we've opened up the process, we can see how the quote's put together. Simply put, we've got a number of human tasks for getting driver, get car, and reviewing the policy. With a couple of calculations, one for calculating the driver risk, one for calculating the car risk, and finally calculating the price. What I'm going to show next is how these rules fit together inside the BRMS product. So now drilling down into the rules, the first rule we're going to look at is calculate driver risk. And you can see the tables laid out, different age groups giving different risks. A driver age of 45 gives a risk of 7. So for a driver of 45 years old, the risk is going to be 7. You can see the rules being generated by the decision table. Here we're showing the rule for that driver between 36 and 45, a risk of 7. So driver risk of 7. Next, we're going to look at the car risk. So we're going to be entering a Ford Fiesta, so we're going to just simply trigger the Ford rule there and set a risk of 1. Again, looking at the rules that have been generated from the decision table, there's the Ford and a risk of 1. Finally, we're going to open up the pricing calculation itself. So here's where we determine for a driver risk of 7 and a car risk of 1, a final price of $2.99, which you can see is a special price. Here's the rule again for pricing. Taking a look down through, and we're finding the rule: driver risk of 7, car risk of 1, and the price of $2.99. So again, using the web browser, we navigate to another one of BRMS's web interfaces. This is called Business Central. Let's log in as admin. Once we're connected to Business Central, we can expand the Process tab to reveal an overview of the current processes available. Here we can see the quote process ready to run for our insurance quote. So now we've arrived at the home page for the 6 products demo. This is the web application. Starting the demo reveals the process. Starting the process reveals the get driver step of the process. If we switch to the Business Central application, refresh the process that you see running, and bring up the diagram associated with that process, you will see the process is now in that stage called get driver, indicated by the the little red triangle. So we're in Get Driver, we've collected information about the driver. Switching back to the web interface, we're now going to step to the next step, which of course is taking the driver age of 45 and taking you to the car information. So now we're in Get Car. So as you can see, we've entered a Ford Fiesta, and that should of course bring back the risk of 1. So let's have a look at the process. If we look at the diagram, you can see Get Car, and that's where we are in the process. We can also click on the instance data, and you can see the information we've collected so far. Mr. John Smith, 100 High Street, in London, and an age of 45. So those variables have been captured and put into the worksheet inside the business process. Let's switch back to the web application. Now we're going to enter the Ford Fiesta, and we get our quote. So here you can see the age of 45 and a Ford Fiesta. Again, we're in review policy, so you can see clearly that we're at the end of the process. And again, looking at the instance data, we now see a complete set of data. Ford Fiesta, a driver risk of 7, a car risk of 1, and the price of $299 has been arrived at, calculated for us by the rules management system. Now you see the final quote: a 45-year-old driver with a Ford Fiesta, price of $299. Accepting runs the final step of the process, retracting the rules from the working memory. So now I'm going to run through the process again, but this time I'm going to change it to a 21-year-old driver, and he's going to be driving a BMW. So this is a BMW 5 Series. I'm going to put a different registration number in, but there we go. Here we have the quote for a 21-year-old driver and a BMW 5 Series. It comes out very expensive at £2,000. And of course you can adjust the rules for different prices and make the demonstration what you want it to be. Thank you for watching the BRMS car insurance demo. Please visit us at www.redhat.com.